And I think I think at the end of the day, what I would tell business owners to do is to understand their cash, understand where that cash is going, but then really understand the profitability of the business, and then what's changing in their balance sheet assets that could affect cash. So those are like key attributes to look at that really will help a business owner understand the health of the business.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Ted Rose, CEO, founder of Rose Financial, who started in 1994, their premier U.S.-based finance and accounting outsourcing firm. I mean, they are helping people get their back office in order. He's acted as a CFO for a number of growth companies, assisted in various rounds of financing and M&A transactions. He's been there, done that on the accounting finance side, and you're going to hear me stress this during the interview, but this is a part of the business that I think so many of us overlook early on, right? And when I say overlook, I mean it's still getting done, but not having somebody that's truly focused and skilled in that area. And Ted's going to do a little presentation just so you can see it on YouTube. You're going to know what he's talking about just listening as well. But these are skills that not everyone has, and not everyone even wants to have, right? And me included. However, I do want to have this expertise on the team, or done somehow. And there's ways that you can hire somebody like Ted or his group in a fractional way as well, right, to get that done instead of having to bring it all in-house if you're not ready for that. So you're going to learn a lot today on a very important skill set that you need on your team, one way or the other, from Ted. Ted, welcome to the show. I would argue that you have some of the most important skills that we need in a business like ours, and I'm looking forward to diving in today. But before we do, Ted, give the listeners a little more about your background, and what you do.
Great, thank you. Yeah. So my name's Ted Rose, founder of Rose Financial Solutions. Started my career at Pricewaterhouse in the audit world, so that's where I cut my teeth. Then became the controller of a publicly traded biotech firm, where I really learned all of the operational accounting and finance types of activities. And then ultimately, I brought that together, the public and private aspects of accounting that I loved into Rose Financial. And back in 1994, we coined the term. We were founded. We coined the term accounting outsourcing in 1995, and we really have evolved that business model into what we call finance as a service, where we bring the people, the process, the technology, the organization, and the data that companies need to manage their back offices.
That's awesome, Ted. It's been I think anybody that gets in business or like a lot of people get in real estate specifically, and they don't have a business background, right? And they really struggle on what you call the back office stuff, right? That's very important, right? And it most often maybe doesn't get done, until they figure out, oh man, this is a big problem, right? And then they have to find somebody that's an expert. Elaborate on maybe some of the skills required to manage that back office and what that looks like.
Well, I mean, it's a broad range of accounting, tax, and finance skills, and nowadays it's a lot of technology skills are embedded into that. And then out of that technology, the integration of that technology really creates a lot of data and the ability to really understand and mine that data as well. And so the skill sets are becoming broader and broader, and that's really where the concept of finance as a service has really started to catch on. And I could go into a presentation about that and give an update of the
let's do that.
Industry.
Ted's going to share his screen. So if you're listening, you can see this on YouTube, but he's going to try to talk through it in a way too that you can, you'll understand, even if you're just listening, because it's important, right? As you're operating a business, that you understand a few of these things, or all of it, really.
And I think I've been doing this now for 28, almost 29 years, and what I enjoy, I enjoy working with entrepreneurs in a wide range of industries, including real estate, and really helping them focus on their business and what they know and love, and really just helping take the lack of clarity out of the financial aspect of running the business. And ultimately, this industry, finance as a service, is really designed to help entrepreneurs do that, and help them to really future-proof their back office. So what's really happening today is there's more scrutiny that's happening in the marketplace. There's a need for more and better data to really understand your business, and then ultimately there's more accountability out there, which is, I think, it's a good thing, but it just creates that additional platform that you have to get over. And all the changes in technology that are happening across the board, whether it's in your specific industry or in the finance function, all of these technologies are creating additional disruptions to companies' business models, but also to the ability for them to manage their back offices. So there's things like OCR, there's reporting automation, there's RPA, chatbots, AI, ERPs. All of these changes that have to make the decision. Do they want to borrow and buy, or do they want to build and maintain? And so that's part of the whole idea of finance as a service, is you can borrow and buy what you need, but you don't have to build and maintain that whole structure over time. And part of what happens in a business as it grows and scales, it starts off as an idea with an entrepreneur who's working to satisfy the needs of a couple customers, and then as they start to grow, something's going to happen within the organization that's going to cause them to be disrupted. And it could be we're not able to track our receivables the way we want to. We're not able to bill on time. We're not able to understand the financial condition of the business. That disruption occurs, and then ultimately you need to manage your way through that disruption in order to get to the other side and get back onto the growth curve. And unfortunately, a lot of organizations, as they're going back up that growth curve, they're unable to sustain the level of growth, as a result of the disruption, not being fully addressed in their approach. And unfortunately, as the businesses continue to grow and scale, these disruptions continue to happen. These disruptions can be internal disruptions that are things that are happening within your organization, or they could be external. Like right now, we're in the real estate market, we're dealing with rising interest rates. That's an external disruption that's impacting your business. So you have to be able to adapt and deal with that additional pressure and scrutiny.
Yeah, it says there the number of disruptions increases as the company grows. Ted, I always expected it to go the other way, right?
No, it keeps on going up, and that's all part of it. So as you keep on bifurcating your the organization and growing inside, it just creates more and more havoc. So what we've identified in FAST and have really coined as part of the definition of FAST is really helping to manage the 5 pillars of finance transformation. And that includes the people, the process, the technology, and the organization, and the data. All of these pieces are connected. As you change one, you have to change all the rest. And if you change one and don't change the rest, then you end up again, creating additional disruptions downstream. And so, to get to your question about what skills are required to really manage the back office of an organization, first you need that leader, that CFO, who leads the charge, who sees the future, but also makes sure that they're tracking information accurately, going backwards and connecting that business model to the numbers. So an entrepreneur has that vision of what they're trying to create, and the CFO is the one that is supposed to take that vision, turn it into a story about numbers, about where they are now and where they expect to go, and how is that actually going to occur. And so in order for a CFO to be effective, they have to have a team to support them underneath. That team includes, the P2P, which is like the payables and payments process. How do you pay your bills? It also includes, payroll. You have to pay your employees and manage all the HR information around that. You have your project controls and billing. So if you're managing projects and understanding how the profitability of your projects are proceeding, and you also need to understand how to bill and collect. The treasury, managing cash, which is really a critical attribute nowadays, especially. And then accounting, being able to turn all of those activities, financial activities, into numbers that make sense, that show your profitability. Are you improving your margins? Are your margins decreasing? That's an important aspect of what you get out of that accounting activity. And then ultimately that needs to be supported with network, your network support, IT support, your system of engagement, as we come to call it, and then your compliance. So that could be tax compliance, or if you're in the government space, DCAA types of compliance. And then
Ted, it seems like to me, and you correct me here if I'm wrong, like almost no matter how big your organization is, you're having to have these things done, right? You're having to get these things done. All those things you just listed, from payroll to compliance or accounting, you may not be able to say afford that CFO position yet, but all that's still having to be done by somebody, right?
Yeah, and this is really where I think smaller organizations get themselves in a little bit of trouble, is that they misclassify who it is that they're hiring. So they may call their bookkeeper a controller, and then that bookkeeper is really just processing transactions. They're not putting it into a meaningful format. Or they call their controller a CFO, and then they're trying to rely on guidance from someone who is really just focused on getting the books closed and giving you good, information about the past. And so with the finance as a service, you really get access to all of those different skill sets that are required, including tax. And a lot of companies, I think, think of tax as something that happens outside their organization, in a vacuum at their CPA's office. And the ability to understand that the tax implications of transactions is an important attribute of running a growing business. So I brought up the term system of engagement, and the system of engagement is really, what is that? It's really different than the system of record. So most companies have a system of record, which is their accounting software. That could be, QuickBooks or CostPoint for a government contractor, and that's what gets audited by the financial statement audit or the IRS or any type of audit agency. But the system of engagement is, how do you interact with that financial data and information in order to get it processed in a cost-effective and timely and accurate manner. The other key softwares that companies have to interact with are payroll, their time tracking systems, and other types of FP&A systems. And then the ability to connect all of those activities occurring in these disparate systems is really what the basis of the system of engagement. And so the types of activities that occur in a system of engagement could include visibility into your projects, the deliverables that are occurring in those projects, transaction processing like your payables and payments, your bills and cash receipts coming in, approvals of those transactions, support tickets requesting information that you need within your financial system from the people who are supporting you, the client information requests that are required from you in order to keep the financial engine running. And then of course the ability to have good reviews of the work being performed, and then manage all that communication that's going back and forth. And I think the communication piece is where a lot of financial organizations get tripped up, because there's a lot of email and chats that occur where that data needs to be really captured and understood and resolved in a meaningful way. And again, the importance of better information and outcomes is leveraging a connected system for better visibility gives you faster access to that data. allows you to harness and transform that data into information, allows you to have faster feedback loops when things are going well and things are or things are not going well. And then it really empowers higher level guidance and better decision making so that business owners can really achieve financial confidence. And that's really what our goal is.
Financial confidence. We need some more of that.
Yes, absolutely, especially in today's market. And so, what do you look for in a fast solution? Is really an outcomes-based agreement for measurable results, intelligent workflows for streamlining all of those processes and activities that we were talking about, and then really supporting a company through the full life cycle. When you implement a system like a system of engagement, you want it to be something that you can stick with throughout the full life cycle of your organization. It's not something you want to swap in and out on a routine basis. And so FAST is a cost-effective and scalable solution for financial success because it promotes results-oriented solutions and encourages businesses to thrive amidst disruptions and complexity, and empowers businesses to succeed with financial confidence. And again, it provides that full life cycle support from startup to exit, whether you're on QuickBooks Online or have moved into a full ERP. It allows for the hybrid ERP experience for some legacy type systems, and then again provides that stable system of engagement, minimizing future disruptions. So,
yeah, no, Ted, that's great. I obviously, we've been working through this recently too, as far as what this looks like for LifeBridge and whatnot. But I feel like we've had different services that's helped us in a few of those ways, like you mentioned on there earlier. But I feel like we would have been further ahead now if we'd have had, expertise, like you on the team years ago. Right. And really thought through the importance of that. I think we were guilty of exactly what you were saying earlier, as far as, you call your controller or would you say a bookkeeper, your controller, and your controller a CFO. And that's not, you may have the wrong roles, right, for that individual. But then again, they may not really be CFO candidate yet. Right. And you have them kind of in that seat when maybe they are a controller or they're bookkeeper or, but I don't know. Any thoughts on that?
Yeah, I think we see that routinely, and even if you have, let's just say you have a solid bookkeeper, they may not have the skills of the controller, regardless of what you call them, and in a properly positioned fast solution, you should be able to fill in the gaps that you have within your system. It might be, hey, I need a part-time CFO support. I need someone who can close the books, but we're covered on this transaction processing. We're covered on this part of our processing activities, and I think there's a lot of flexibility now with the types of technologies out there where it doesn't have to be an all or nothing type of solution. Yeah,
for sure. Any more in your presentation? Do you have some more here, or keep going?
No. I think that's it for the okay. Presentation portion of it.
Yeah, no, that's helpful. And I just think even the one slide that lays out all the things that needs to be done, it's like, no, I need some help, right, to be able to do those things. And I just think it's a skill set I've learned that I don't have, right? And it's not something that like energizes me, accounting, right? But the importance of having it done right does energize me. Does that make sense? It's like, yeah. I don't want to be in the books, every day and looking at every transaction. And however, we need somebody that is doing that, right, and does care about that to a very detailed degree. And that's where somebody like Ted, and his group can help in a massive way. Ted, when have you seen, or what are your thoughts on like how big an organization typically is before they do hire, say, an internal CFO, right? When does that typically happen? When do you see that, versus a third party, like you all, or maybe, they will stay with somebody like you as their, say, fractional CFO long term?
I think, each organization is a little bit different. Each industry is a little bit different. I think there's, the key, it really comes down to like some key attributes. And that is if you need a CFO to go out and raise capital, you need a CFO to, you expect that to be a full-time effort based upon, routine capital raises that you need to be involved with. I think, that's really where more of a dedicated CFO makes a lot of sense. If the focus is the business model itself is going to be fairly stable, but it's going to be growing. Really what it comes down to is how are we going to make sure that our financial systems are producing the information that we need. I think a fast solution can be adequate for companies as they grow, well past 100 million in revenue. So, one example of that is, we have a client that started with us about 5 to 6 years ago, and it was, 2 or 3 salespeople who said, "Listen, we're going to start a company. We know how to sell, and but we know we need a solid back office, and we've seen companies get sideways when they don't have that back office. So we want to make sure it's done right, and from day one." And so they came on board 5 or 6 years ago, and they just went out and started selling, and they didn't have to worry about having a back office. And we just kept on adapting to their growth, and this year they're expected to do about 250 million in revenue. And so while that's not the normal story of a client of ours, it's certainly an opportunity for the right people who are able to take guidance and understand the importance of having that financial discipline and how that complements their skill sets in on the sales and business development side.
Ted, I get questions often too about, and I love your thoughts on this, as far as, is my CPA my tax advisor as well, right? And oftentimes, for so many people, it's the same, right? Do you see that as the same, or how many people should have one of both? Or even if we have, say, a fractional CFO, tax advisors as well from a third party. How do you see that working best?
So I think that that is another important skill set of whoever the financial leader of the organization is someone who can manage the tax strategy, which is different than create the tax strategy. And so the important aspect is, like, there does need to be someone who is a tax professional who understands what the outcome is going to look like, given a certain set of inputs. And they need to be well versed in building tax strategies, and in each industry is a little bit different, and sometimes there are some specialties you need to bring in. That's what CPAs and tax accountants are there for, and even in some cases tax attorneys. So knowing when to bring in the right professional, I think, is an important attribute of a CFO, is knowing what you know and knowing what you don't know. But being able to hold those complex ideas and then ensure implementation throughout the year is that's a financial discipline that's part of what an organization needs to have. But absolutely having a solid tax professional, sometimes that does need to be an expert outside of that the fast solution. And again, we work with all sorts of CPA firms to do the audits of our clients and also to do the tax work as well.
Yeah, speak to that. When do we need an audit? And who's the candidate for an audit, or is it everybody? And I mean, obviously we're in the commercial real estate business specifically, but should we be getting an audit done by somebody, and what does that mean exactly?
So again, I think there's a couple different avenues this comes into play. So the first is going to be if your bank requires it for the debt that's coming in, and so that would be the requirement. What we have is we've built relationships with lots of banks, so we know we have those relationships. They know our work. They understand the credibility that our financials bring to the table. So sometimes that allows an organization to defer the requirement of an audit, from their bank. But at some point, the bank is, when you get to a certain size line of credit or loan, they're going to want to have that audit. If it is real estate solely, then usually the appraisal is going to help defer that the requirement of the audit. But if you start to get into going out for institutional funds, high net worth or family offices, sometimes that audit is going to create be a requirement and or create that additional credibility that you'll need. And then again, working with an organization that a full fast solution, they're going to have all the tools and skills necessary to ensure that things are being managed so that they are auditable. And then ultimately, as you're going out and trying to bring in investors, even if they are high net worth individuals that might not have an audit requirement, having that independence on the back office, and I think creates additional financial credibility, which I think ultimately reduces the cost of capital over time.
Yeah, that's awesome. And thinking through how it affects the cost of capital over time as well. Ted, any final thoughts on you would want the listener to leave with, which just on the financial side and financial management and in their business before we move to a few final questions?
Yeah, I think at the end of the day is if you're in business, you need to know your numbers, and so otherwise you're not really in business. And so I think that's the important aspect of it. And knowing your numbers is understanding your KPIs, understanding what the GAAP financials look like, understanding how those two things are connected. And that's not always obvious, and that's not always a skill set that entrepreneurs have. And that's, I think, the important message here is that financial visibility, leads to financial confidence.
Yeah, love that. That was really good what you just said. Listeners should go back and listen to that again. No doubt about it. And it's like if you don't know the numbers, you're not running a business. Love that. But the data, right? You need the data to be accurate, and you need the data to make decisions. And you got to have somebody that's an expert in putting the data together, right? and oftentimes it's not me or the entrepreneur, right? That is starting a business. And so, Ted, what's maybe a way you all recently improved your all's business that we could apply to ours as well?
Well, I think one of the big things that we've done this year is we rolled out our next generation system of engagement platform, EASB 23.1, that rolled out on May 18th. And we really view that as a game changer for the finance as a service industry, as it really creates the ability for all of these types of activities that are required to run a back office for an organization to be managed effectively, cost effectively, and create better visibility and access to that information for our clients.
Awesome. Yeah. So staying up on tech, and it sounds like that's a piece of technology that's big deal. It's going to streamline so many things for the businesses that you all are working with. And what's maybe the most important metric that you track? It could be personally or professionally.
Wow. Okay. I think there's a lot. That's like a wide, broad question. There's all sorts of KPIs, probably 40 of them that we really look at. And I think I think at the end of the day, what I would tell business owners to do is to understand their cash, understand where that cash is going, but then really understand the profitability of the business, and then what's changing in their balance sheet assets that could affect cash. So those are like key attributes to look at that really will help a business owner understand the health of the business. Because if all you're looking at is your P&L, which is showing your profit, profitability, revenue minus expenses equals profitability. If that's all you're looking at, and your receivables are growing on your balance sheet, you're going to run out of cash. If you're, so you have to look at really the connectivity of all of those areas, and then ultimately, once you get past that, like basic understanding of of the business and understanding the health of that business is identifying for your industry, what is that one key KPI that if I can focus on that one number will tell me whether my business is growing or declining. And every business is a little bit different. So that's why I can't give you an exact answer on that.
Sure. No.
Ultimately,
that's
that KPI is a key item for you to get to, and it really requires you to really understand the business at the next level financially.
What's a habit that you're disciplined about, Ted? That's that's really I don't know, changed the way you do things, or something that's been important to you.
Well, I think the habits and the disciplines I think are critical, and I think in my mind, success is not an event. It's a disciplined approach to how you live, and then how you deliver for your clients over time. And so you can figure out what are the activities that work for you personally, and you repeat those, then you're improving the probability of success. But I have my own like disciplines of what I do, as far as day to day and week to week. But I think everyone's probably a little bit different on that.
I thought that was very well said, Ted. You said success is not an event; it's a discipline over time. I think. Did I get that right?
Yes.
Yeah, I like that quote. That's really good. That's right on. All right, Ted. How do you like to give back?
Well, we have a couple things that we've done. We started 10 plus years ago our RFS Gives Back Foundation, and we do lots of different things. We recently endowed a scholarship at University of Maryland toward the business schools, business students that are involved with the athletic program. So that's something that is endowed now, that will be supporting education for accountants, finance professionals, data professionals, from the business school, and those are the individuals we are trying to bring into our business. And then we also have really had this Meals for the Homeless program that we've run for the last 10 to 15 years. And we started off making 150 meals for the homeless, delivering that to a homeless shelter. And we then everyone had such a great time doing it. And it was really impactful that we decided the next time to double it. So we then increased that to 300. And then the next time we did it, I said, hey, let's double it again. And then my staff said, oh, slow down, let's get this figured out. And so then I said, all right, we'll just add 150 again, because we figured out how to do that. And so over the last 10 or so years, we've done it, once or twice a year, and it's now up to over 3,000 meals that we're able to put together and to deliver to a wide range of homeless shelters across the county. Now we go to multiple jurisdictions.
That's awesome. Ted, I'm grateful for your generosity in that way, but also just your time with us today and sharing your skill sets that you've gained over many years in business now, and helping so many other people, and really managing this back office that you talk about for so many people. That's crucial that we have that we're doing it right. And oftentimes we don't have the manpower or the skill sets. And that's where you come in, no doubt about it. So thank you again, just for your time today. How can the listeners get in touch with you and learn more about you?
Well, you can go to our website at rosefinancial.com. You can find out more about us there. Send us a note at sales@rosefinancial.com. I'll see all those contacts coming in, and look forward to connecting with you.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.